See, markets are either getting tired or they want to pause. And I think it is evident purely based on the price action, what we've seen, and in terms of how the positioning of the heavyweight is. And there is nothing wrong with it. Frankly, nobody is going to be complaining about the market setup in terms of where it is. If you do a good old comparison of global versus local, I guess global markets are strong, but there are two monitorables which you cannot ignore. One, dollar is at 101. Yes, sir. Dollar index is at 101, and crude prices have popped right back up to 83. So 75 has become 83, something which we cannot ignore. So I'm not saying that markets are about to reverse. I'm not saying that markets are going to fall. All I'm saying is that markets are slowly and gradually showing signs of fatigue, showing signs that inertia is just fading away. And even though I would continue to bat for the bulls, I would just say that we are reaching that patch where maybe bulls need a monsoon break.
A monsoon break, bulls definitely need that, and it looks like they are in mood of that given the fact that consolidation has been the name of the game. And then the big question is, where will the leadership come from? Because of course the likes of autos have seen massive run up this year already. ITC, the big trigger about the demerger is announced, and of course we saw how the stocks a bit of a sell-off on news yesterday. Reliance Industries, the big trigger which was there with respect to earnings, as well as the demerger of the geofinancial price discovery, that has also played out. For HDFC Bank as well, the merger is done. The other banking numbers are also out. So Nikunj, that remains a big question, right? Which stock, which sector will now gain leadership?
Now let's look at that graph. I think it's an important graph simply because what it does is that it really captures the last 45 days of the market setup. And you want to stay with this graph right now. Why? Because ITC, well, the demerger has been announced. So the stock which has been an outperforming stock, the trigger is not there. For Reliance, well, the Geo Financial Service price discovery is done. So last week, Reliance and ITC, that potent combination of two heavyweights, they were doing tango. That factor is behind us. HDFC Bank and HDFC Limited, thank God the merger is done. So that mini re-rating, those concerns which were there, that is also over. Banks, including ICICI Bank, important numbers have already come out. So my limited point is that if you're looking at the index, where will the new trigger come from? Which is that next stock which will drive the market? So this market now needs a new leader. It was a combination of private banks, Reliance, ITC, which all of them had triggers to itself, and they are down. Today we will be done with L&T. And frankly, if you look at the contribution here, see, look at the contribution in this year. Large part of the contribution has come from ITC in this year itself. That trigger is out. ICICI Bank, I think good numbers, but it's not going to create any new upside momentum. L&T, the buyback announcement comes today. Results and the buyback announcement hopefully today. Reliance, including Geo Financial Services, the trigger is out, and HDFC Bank is 99 points, 100 points coming from there. That trigger is out. My limited point is, where is the next big trigger going to come from the market in terms of a leadership?
Yeah, and also, Nikunj, important to track what the strategy should be right now, because you're saying, okay, the bulls need that monsoon break. At one time, we were talking about 20K, but that now doesn't seem to be in sight. Are we fastening our seatbelts? Do we need to be picky and choosy? What's the strategy?
See, believe it or not, the markets globally and locally are hinging a lot on Fed outcome. Even though it's going to be an outcome that, okay, they're going to increase interest rates. But then markets are saying that if Fed is done with the increase rate cycle, what happens to the market setup? So that, I think, will be a talking point for next 2 or 3 days. I guess the best way to approach this market is that if you're long, and I'm talking about long leverage positions, time to reduce your positions. You need to take some commitment off the table. It's been a great summer rally. Well, the season has changed, so the strategy should also change. Summer is over, monsoons have started. So if the season has changed, then your strategy should also change. So I think it will not hurt you a lot if you start lightening some of your long positions. Similarly, don't sell your core portfolio. Got some delivery stock which you bought for 2 or 3 years, don't sell it. All I'm saying is that get out of your long positions and don't make fresh investments in small cap stocks. So cut your long positions, trim them out. B, don't sell your core portfolio, and C, don't make fresh investments in small cap stocks. My limited point is that we cannot call it summer rally of 2023. Summer is over. Monsoon has started. So if the season is over, your approach has to change also.
Well, yes, you'll have to change your strategy as the season changes and the market mood changes as well. And for now, the market is not in that roaring rally that we saw in summer. It's time for a bit of a pause, a bit of recalibration when it comes to your portfolio. And of course, because there are big cues lined up, of course, we have earnings to deal with. This week, almost 15 to 16 Nifty companies are reporting earnings. There's a lot of global earnings lined up as well, right from a Microsoft, Alphabet, etc. And then 13 central bank action. Of course, the top of the heap is, of course, what Nikunj alluded to, the Fed decision, but there are 13 central banks meeting. And of course, earnings, that remains in spotlight. And today as well, out of those 15, 5 will be reporting their numbers, right from auto majors like Bajaj Auto, Tata Motors. You also have L&T, wherein there are expectations are ripe for a buyback as well. Asian Paints as well, because of course, monsoon is going to be weak. What's the commentary going forward? That will be important. And then SBI Life, insurance, is it finally going to be out of the slumber or not? That's something to watch out for. But Nikunj, what's your take for the earnings season so far? Because it's been fairly in line or a bit muted. There hasn't been a big surprise that has come even from the banking names for that matter.
Yeah, so that's the point. Look, when the market rally started, you were way below the 5-year average. Now you're in line with the 5-year average. Earnings have not expanded the way which we thought. So earnings are okay, but they are not really contracting and they are not expanding, which means earning upgrade is unlikely to kick in. P expansion has already happened. So where will the trigger for the market come in from? It is going to be a function of liquidity. Now, calling the liquidity is always very, very difficult. You cannot judge the market solely dependent on liquidity. Please don't go and buy the market because FIs are buying. They may start selling also. So that, I think, is a false thesis to just ride your independent decision on because, okay, foreigners are buying, start buying it. No, sir, please don't do that. I've learned from experience that's the worst way to judge the market. But earnings, I think, will play a crucial role. Fortunately, there are no earnings downgrades. Unfortunately, there are no major upgrades. Tata Motors numbers would be important purely looking at the curiosity around it. Look at what happened to ITC. We'll talk about ITC, but I mean, the merger has gone through or the demerger has gone through. Nobody expected it, but the stock sold off because of buy the rumor and sell the news. Similarly, in earnings, Tata Motors also, since the performance in the stock has been so strong, all the HOS numbers and the whisper numbers are Tata Motor ka number acha aane wala hai. So they better deliver. That is the problem, because for stock which is up 60-65%, if everybody is talking,
expectations are really riding
exactly.
high on this one.
So auto is one sector where it is not that the trajectory is changed 180 degree. There are incremental changes in business. There are incremental changes in margin. There are incremental changes in global demand. But the stock has taken a massive re-rating. This re-rating has to be justified with something more than what brokerages are expecting.
Okay, that's the entire earnings picture.